Have a great show.
Thanks.
Oh,
So
Jonathan,
Yesterday, a lot of healthcare people.
I'll text you the Twitter link for you to reshare.
Okay, but aren't you going to post it on X as well?
I can post, sure.
Yeah.
No, I'm saying, okay,
Yeah, no,
Jen.
I'll send Jonathan the link and I'll send you the link too.
Great. So yesterday, the JP Morgan conference kicked off on Monday. And so yesterday I talked to a friend of mine who was just like the market being down, the biotech index being down 3% has just made everybody there happy about deals that were announced, but absolutely depressed. I'm sure today with things rebounding, everyone's going to be in a great mood. I wonder if if you charted the bar tabs to, take 7 different San Francisco bars and their bar tabs per night, and you chart it against the biotech index. If down 3% results in higher or lower, like are people drinking their sorrows away? Or are they actually just partying more when it's up? Bob, was there an oil and gas conference that's as big as like a JP Morgan healthcare conference?
The Goldman conference was last week, and we put out a note and talked a little bit about what some of the guys in the Haynesville natural gas play were saying about when they would ramp up production or pick up activity, which was sort of interesting here. Sort of confirmed our view that, you got natural gas prices here at $4 today, but that's because of the cold weather. Apart from these weather-driven spikes, I think the gas price should be down around $3.50 or lower, and we'll see how that. And the futures market reflects that in March, but then you look out at the futures strip next winter, and it's above $4. So the market's getting, pretty bullish about the long-term outlook, in addition to this near-term spike. So we'll see. This cold weather is holding in, I think, a lot longer than what people originally anticipated. Like I said, this morning was as cold as it's been. I get up and run every morning, and this was the coldest morning by far yet.
How far do you run, by the way?
5 to 6 miles. And this morning it was like 26 degrees with the wind chill. It was like 5 degrees. So it was cold.
Every morning, 5 to 6?
Yes. And then Sunday I do a long run.
His orthopedist is just rubbing his hands together, just waiting. Like he's like, I can't wait another couple of years. And at his age, I'm going to have 2 knee replacements, hip replacements. I can't wait. Can't wait. His endocrinologist is upset because he'll never see him. He's like healthy as can be, but his orthopedist is like, okay.
Are you under an hour?
Yeah. 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 I ran in high school and college, and so but I've had 5 knee surgeries, so it's slowed me down a little bit.
Sure. Wow.
But yeah, I tried. It's not easy getting up and running in the morning. Trust me. It feels good afterwards. And if I ever take a day off and don't run, I feel guilty. So I kind of force myself to get up and go. But and I run a lot of these races on the weekends and such. There are none right now, but a lot of these I run. So. While David's in the gym lifting weights, I'm out running.
Exactly. Do you know there was Mike Mayo, the bank analyst? He power lifts as well.
Yeah. In the gym with you, or is he in the same gym with you?
He just happens to tell everyone he meets about that. He's a funny guy. He really is. I'd like to ask him what his PR is, though, and then I should do that in public and then just shut him down. Be like, hey. Well, we are now at the start time, and we are going live. Good morning, everyone. It's January 15th. This is Wall Street Beats. I'm David Maris. We have Bob Morris. who's going to cover oil and gas, and a special guest today, Jonathan Stern, the founder and moderator of Hymns House, an online community of Hymns investors. We're going to talk about GLP-1s and Hymns and what is Hymns House. But first, we're going to talk a little bit about oil and gas. Then I'm going to talk about some healthcare things, and then we'll get to Jonathan. So Jonathan, sit tight, and maybe you want to pepper Bob with lots of really difficult questions about oil and gas. But Bob, it is absolutely freezing in the Northeast. We've talked about this before, that sometimes there's a knee-jerk reaction to oil and gas prices for people who just go, okay, I don't know anything about reserves, but let's just know it's cold equals higher gas prices. What's on your radar right now? What are you looking at this week, and what came out of this conference?
Yeah, so we talked a little bit last week about the Goldman Conference and the natural gas prices and producers in the Haynesville, which is the marginal supply of natural gas in the U.S. And basically they said to grow Haynesville natural gas production, you need a price above $3.50. And we're above $3.50 here. And, bottom line, oil and gas prices are both ripping. The weather, which continues to be cold, I think this cold weather is extending longer than what originally people forecast, is really continuing to keep natural gas very strong. It's helping crude oil at the same time because people burn fuel oil for the heating their homes, particularly in New York City, all the big buildings and everything. But at the same time, the bigger factor on crude oil is being the continued draw on inventory. So we've got, despite somewhat weak demand globally with what's going on in China and elsewhere, inventories of crude oil in the U.S. continue to be drawn down and come in below what people were expecting. We'll get another data point here today, but that's really what's been underpinning this strength in the oil price, and that's just lit a fire under these stocks. And if you look technically, a lot of these names like EOG, EQT, Expand, they're breaking out technically. So as long as the commodity holds up here near term, these stocks are going to be very strong. I think it's going to be interesting to watch here too, because I think what up until today, what really had helped the momentum on the energy stocks has been the funds flow. And so as we came into the new year, energy had been the laggard last year, and people have been buying energy and selling tech. I think particularly for tax reasons, a lot of people had huge gains, and a lot of these big tech names said, look, they told their personal finance manager, do not sell these and hit me with a big tax bill in 2024. Wait till after the first of the year to sell some of these to take some profits. And I think you saw a little bit of that. And with the fears about rates going up and 10-year moving toward 5%, you saw a lot of rotation out of tech into energy. And it doesn't take a lot of funds flow out of tech into energy to move these energy stocks, particularly when the commodities holding in very strong. And so now with today's number on the CPI, which came in cooler than expected, which has sort of lit a fire into the market, and rates are down, if tech begins to take off again, it's going to be interesting to watch to see if any of that money flow comes out of energy back into tech or not. It's holding in there right now because oil and gas prices are still ripping today. So people are still buying energy. But, we're watching this very carefully. I'm holding on to all my energy stocks. I wish I had more here. But I don't want to jump in and chase them today. But, it's good. The energy stocks are holding in strong. And, if oil continues to hold in there, if inventories in the U.S. continue to be near the bottom end of the range, and we continue to have a very strong economy, oil's going to hold up.
So the CPI print came in a little bit light today, but also some news yesterday that came out that's kind of being rumored around. I don't think it was official news at all, but that Trump's tariffs, he's planning on doing a monthly kind of gating of tariffs that'll be a little bit each month to kind of put pressure on people to negotiate. And it's actually a pretty innovative way of doing the tariffs. Does that give any idea to like stronger oil prices or weaker oil prices? How do you view that? Is there an argument to be made that, well, doing that means that he's not that serious about really hurting China, and that allows China to recover a little bit better and maybe keeps an oil price that's more stable? Do you see anything like that in that type of tariff talk, or am I missing that completely?
Well, it depends on who the tariffs are on. And so part of the bump up in oil this week too was that they're putting on new tariffs on Russia, which makes it more difficult for them to sell crude oil to places like China. And the rumor was China was buying more crude oil, fearing that they wouldn't be able to get it from Russia, trying to fill up their inventories. So it really depends on who he's putting the sanctions on. And the thing is, he wants lower oil prices. He wants that CPI number to come down even more. And the biggest component in there is energy prices. So, the big debate is he always says, drill, baby, drill. How do you incentivize the oil and gas companies to drill more? I don't see how you do that. Just because they've been rewarded over the last 3 to 4 years for being disciplined, not outspending cash flow, returning capital to shareholders. And I don't think that changes in this environment. Where do you get people to drill more? Well, if you free up more capital, go to the private guys. That's how you get more crude oil production. But I don't see him incentivizing that much more drilling that's going to bring the oil price down on that basis alone. But to your point of tariffs, it really depends on who the tariffs are on. And a lot's going to change here come next Monday. And maybe he'll use these tariffs on Russia as a stick to say, look, you got to stop this war with Ukraine. And if you do, then we'll let you produce a little bit more. And that's the big variable people haven't been talking about, but I'm keeping an eye on, is that's something he can use to try and broker a peace deal between Russia and Ukraine. You get a peace deal and they stop that war. And he says, well, as a reward, you can produce a little bit more oil. We'll see.
So now you own a bunch of these names, and you said earlier, just a minute ago, look, I'm not going to chase them, but if you were underweight them and you were looking at them today, what's like the one or two that you said, well, if it's going to continue to run, this 1 or 5 or whatever number you want to use are the ones that are most likely to continue to run?
EOG is on my screen. It's, technically it's breaking out here. I think they're going to have a good quarter when these companies begin to report here in a couple of weeks, 2 to 3 weeks. So, if you said, look, hold my feet to the fire, you got to buy something today, I'd buy EOG, I'd buy C&Q, Canadian companies, pays a very nice dividend, up above 5% yield here. On the gas side, look, these things have continued to run here, and EQT is breaking out. If you said, look, it doesn't matter, you got to buy something here on the gas side, I'd be buying EQT and Expand Energy, EXE.
Perfect.
And I own.
Well, let's hope that it's. Well, you're lucky. I don't. So I'll come to you for a loan.
David, I own a little bit of Lilly too. So.
Okay. Well, then I won't come to you for a loan. Well, I'm glad you mentioned Lilly. We're going to talk about that. I have a whole bunch of healthcare names because I haven't been on for a little while. So first, let's talk about Haleon, HLN, one of my favorite names, and it remains that for 2025. It's come way back in, which is great. It does this. It's kind of cycles through this. They make Tums. They make Sensodyne toothpaste. I've mentioned that in an apocalypse, people are going to still be using Tums. So I like the defensive nature of it. It doesn't necessarily perform well in a great growth market because it is so defensive. But Pfizer yesterday sold a big chunk. I guess it was announced today that it was closed. A big chunk of their ownership. They're down below 10% now. And that's been an overhang. I expect them to sell the rest of it at some 6 months from now. But this is a company that's very simple. They're paying down debt, very slow growth. I like it for both of those reasons. So I'm glad this overhang is out of the way. I think that the stock will perform better now. Zlabs, probably my favorite biotech company. They had great data today on a global phase 3 trial in metastatic cervical cancer, met both its endpoints, overall survival, progression-free survival. They own this for the Chinese market. It's a big milestone. Again, I think 2025 is going to be a milestone-driven year for them and still remains one of my top biotech picks. Really undercovered, underappreciated name. Now on the obesity companies, Eli Lilly, Novo, Viking Therapeutics, these stocks yesterday were hit hard when Lilly reported their pre-announced fourth quarter results and gave a preview to 2025. Neither one did the street like. The fourth quarter numbers came in below expectations. And the CEO, who is very likable, and again, it's a quality company, but he spent the whole day explaining to people at the JP Morgan conference that, look, we own this, as though that absolves a company from being so bad at predicting things. Now, this is the company that dominates the GLP-1 market with Novo Nordisk. So if you can't predict your quarter 1 quarter ahead, tell me you should believe Morgan Stanley's or Goldman Sachs's view on what it looks like 5 years from now. again, having done this, I always look at how good are the companies at predicting this. And I mean, especially when they're disappointing to the downside and all the street estimates are much, much higher years from now. So I don't see how the stock really outperforms other than the buy the dip mentality that so many people have with Lilly. Again, a quality company. Do I think that numbers are super at risk for 2025 after this next 2-week adjustment period? Probably not. They probably sandbagged a little. But the clear thing that I think is going on is that you're kind of having a race to the bottom with pricing. And you have the GLP-1s. We're going to talk with the founder of Hims House shortly, but you have the compounding putting a little bit of pressure on that. But I think bigger picture is that you have Lilly with better data than Novo Nordisk, and Novo Nordisk having to fight probably with price. And then you have the specter of Medicare drug price negotiation for semaglutide in a year, and that's going to put pressure on pricing overall as well. So I'm not a big fan of Viking Therapeutics late to the party. That's been down 50% or more since I mentioned that as a short, as my being short the stock. And I do still think that Lilly is a great company. I just want to own it under $700. And so I think we'll get there. We're getting closer. Now, on Establishment Labs, ESTA, Russell Young and I had mentioned this as they have the best in class breast implant that was approved in, I think, June this last year in the US. And it's starting to sell. They just launched it. They pre-announced the first quarter, and the stock was down 30-something% 2 days ago. And if they pre-announced it was a fine quarter, what happened? Well, the CEO, who was the founder, who's been there for 20 years, said he's stepping down. Now, it shouldn't be a surprise to people, but they didn't communicate it as well as I think they should have. They brought in a COO last year, and the COO, when you bring in a COO, when you're the founder and the person's senior, you kind of understand that that will end up becoming the CEO. Well, then they announced, hey, he's stepping down, and the COO is going to be the interim CEO. So it's a little bit of confusion. Is he going to be the CEO? Is he not? What's the that said, I know both the chairman and the CEO. I spoke with the chairman yesterday, and he said, look, it is what it is. He wants to spend more time the CEO wants to spend more time focused on the internal workings. He's going to stay on the board. He's going to still stay as an advisor. He's still going to be like the chief, community officer or something, some made up name, but that says, hey, look, I'm still going to work with plastic surgeons to make sure they're using the product. But mostly he's going to focus on the innovation and stay closer to Costa Rica, where he lives, where his children are. So my read of it actually is, here's a guy the company's ready for its next phase of growth, and he's an entrepreneur founder, and this is the right time to make this change as they're launching in the US. Not a right time for investors because it brings all this uncertainty. But at under $1 billion, I think it's a great acquisition target. Do I think that the launch could go poorly? And yeah, that's a risk. I don't think it will. It's a risk. So could the stock be lower? Yes. I'm going to probably buy some more here. I actually am out of the stock right now. So when I mentioned in June, and then I told you I brought down healthcare exposure, I got out. And so I missed this. But I think this is a good entry point for me because I do think that they'll sell at twice the price. So, and then lastly, let's get to Hims and Hims House founder Jonathan Stern. Jonathan, thanks for joining us today. Hims House, for those who don't know, it's an online community. Hims shareholders, over 1,000 subscribers, collectively representing about 1% of the stock of the company's outstanding shares. I want to dive into a bunch of key questions with you, Jonathan, but maybe first start by telling us more about Hims House. What inspired you to create this community? What is it?
Well, thank you, David, for having me on. Good to meet you, Bob. And hello to the Wall Street Beats community. I'm Jonathan Stern. I was a software engineer for 2.5 years, left the startup where I was working at the end of August 2024. And pretty shortly thereafter, mid-September, decided to create an investor community for Hims and Hers. The goal is to make it the highest quality Hims and Hers investor community on the planet, not another StockTwits. So We've been at it 4 months. We have, let's see, 4,000 followers on Twitter, 1.5 thousand in the Discord. As you said, David, we own close to 1%. That's the goal. We're not quite there, but the goal is to get to 1% of total company ownership collectively. And in addition to building the highest quality investor community for Hims and Hers, it sort of emerged as something like a media company as well, where we do a weekly podcast. I send a daily newsletter. We have this Discord, which is sort of, I don't know if everyone knows what Discord is. Some of my friends don't. It's a group chat app, but you're able to have, you're able to segment the conversation by topic. And so we have maybe a dozen channels, one dedicated to company fundamental analysis, another dedicated to the stock price, a third dedicated to data tracker, a fourth to ads. I mean, Him's ads team is spectacular. And so you'll have, many of the 1,500 investors posting the ads that pop up on their Facebook and Instagram feeds or that air during weekly golf events. And so we have this community of 1.5 thousand, again, close to 1% total ownership. And I do believe in 4 months it's become the smartest, certainly the biggest Hims community on the internet, but I think it's the smartest as well. I can get into why that is and how a few members of the community were ahead of recent events with GLP-1s, but that's just a summary of Hims House.
Yeah, so I'm actually really surprised by the quality of it too. Not I didn't know you beforehand, so I'm not surprised at your doing the quality. It's just I'm really surprised at the robustness of it, and I want to ask you maybe offline of like why do it with Hims and her. Actually, I'll ask you now. Why do it with Hims and Hers versus doing it for Apple or Tesla when there's so many more potential people invested in that? Or do you think that's well covered by other forums?
No, nice question, David. And so I'll say, like, it was always a goal of mine to build a company. It was always a goal of mine, even while working at the startup, to build my own thing. My goal here is to build the best Hims investment community, but assuming I'm able to nail it with Hims, the goal is to expand to other stocks. Now, I sort of have SoFi House going, much smaller, and I've just started a week ago, so I wouldn't,
Okay, so you do plan to roll it out to other things because again, the quality is really you have a physician on there, you have a whole bunch of other folks that don't say their backgrounds, but I imagine they're physicians and accountants and the rest. And I've noticed like a lot of the data, but what data does a subscriber get, and what do they get for how did you get 1,000 people to look at this a day? Or 4,000, whatever the number.
And I should say before I get into that, and I'll share my screen and walk you through some of that data, but I partnered with an excellent equity analyst, Lewis Stevens, and a former Hims doctor. He goes by Dr. H. He was in the Hims network, no longer is, but partnering with the industry insider as well as the equity analyst has allowed us to sort of have a differentiated and interesting perspective on this company. So that was the beginning. Let me share my screen to show you the data tracker. Just a moment. You guys see this?
We cannot. Now we can.
And you can hear me still?
Yep.
Yes.
Excellent. So this data tracker is available to subscribers. We track the goal here is really to have all of the most important data about Hims all in one place. And if you ask a traditional investor what is the most important data, they'll point to financials. And so on a tab, 6 or 8 tabs to the right, we do have the key financial metrics and charts, but we also have alt data, which I don't know that that's consolidated in one place anywhere else on the internet to the degree that we've done. We have, and I can blow it up in case that's better. We have web traffic here dating back to 2022 on all of the Hims properties. So Hims, Hers, Apostrophe, which is their dermatology subsidiary, and then their UK division of Hims, right? And so you can see how the total company web traffic has grown over the last 2+ years.
And
We're also
it's difficult to see because it's kind of
ah,
zoomed out still. But is that
darn,
monthly data or weekly data? Looks like monthly.
maybe that's better. We're also tracking row. Yeah, so we have it monthly. This is pulled from a company called Similar Web. And just to go through like the most notable result of the most recent month, December 2024, this is the Hers brand, which month over month jumped about 25%. So versus November, Hers is now at 3.5 million web visitors, a 25% jump. More interestingly, I think year over year, close to, not quite 200%, maybe 150% year over year growth for the Hers brand, under 1.5 million in 2023, now well above 3 million in 2020, December of 2024. There are a lot of Hims stories for 2024, obviously GLP-1s, but the growth of Hers, which really started just a couple years ago, started ramping just a couple years ago. CEO Andrew Dudum says 400,000 Hers subscribers, so it's now 20% of the customer base. The web traffic is bearing that out as well, so it's pretty cool to see.
All right. So, but if I look at the overall and I see 6.4, I see 6.5 kind of a year ago, or where am I looking for the overall brand?
Got it. So column F here, I realize this may not be great for the viewers, but column F here is total Hims and Hers web traffic. Column B is just Hims.
Yeah. So if I look at the year over year, just Hims, it looks like,
Yep.
It looks like things are flattening out. So overall, yes, year over year things are up, and that's being driven by the Hers. But is there a story behind the story of, well, maybe the Him side of things is slowing, or is it like what do you think is going on, or what does the community think is going on?
So nothing about Hims is slowing. Maybe in terms of web traffic, it looks like at least growth rates are down. But let me find the next tab here. If you look at credit card data, for instance, which comes from Bloomberg, we have, for the final few weeks of 2024, this is a sample of credit card data that Bloomberg's second measure gives their subscribers each week. We had over 1 million in credit card sales for the final 5 weeks, for the last 5 weeks, I guess, final 4 weeks of 2024, so holiday season. If you compare that, can you still see this, David?
Yep.
No, it's kind of small.
So compare that to like 700-ish. Yes.
2023, and I think this is a more accurate proxy for Hims revenue, right? You have 600 to 700,000 during those months, which you go over here to the growth rates. Like, new customer sales is very impressive.
Okay, and so now this is the million that you're showing. Is that transactions, or is that's not dollars, right? I mean, it's number of transactions.
So this is dollars, but it is a sample. So second measure will take a sample of credit card data, and so it's a fraction of Hims' overall revenue, but they're able to see, this credit card is paying Hims this much, and they aggregate that and they deliver that at the end of the month. And it's the same credit card month after month after month after month, which is why we have returning customer and new customer data. Does that make sense, David?
Yep. Now, one of the things that the community did really well this last, maybe the last few weeks, was we were talking about the return or the change of status for under shortage versus not under shortage. and one of your contributors, I don't know if it was the Dr. H or who it was, kind of walked through in detail ahead of time of why this would change. So there's another current shortage on semaglutide. What's his view of that, and where does the community stand on that?
So we have 1.5 thousand communities mixed, but I'll just give you a quick backstory on terzepatide. We have a fellow who goes by the pseudonym Bayside, who is a professional lobbyist. He's worked in the White House. He's in and around DC all the time, and put together a 12-page research report. I didn't pay him. No one asked him to do this. But one night, I think his kids were sick, and he put together a 12-page research report outlining why terzepatide was likely to go off shortage. So terzepatide was on shortage for many months, and it was Sunday night, and Bayside released this report saying that on Thursday, the FDA would lift the shortage. Yeah, well sourced and all of that. It did come to pass that terzepatide went off shortage. The document there can be found in our documents section in the Hims House Discord. So that was it was October that terzepatide was taken off shortage. Since then, the Outsourcing Facilities Association has been battling the FDA in this Texas court, and they've gone back and forth. Most recently, terzepatide has been taken off shortage. Now, the moment that happened, Hims fell 15-20%. The reason being that many market watchers, investors, traders believe that terzepatide shortage status is an indicator for when semaglutide will be taken off shortage. Semaglutide, of course, is the active ingredient in Ozempic and Wegovy. It's also the compound that Hims sells. Hims does not sell terzepatide. Hims only sells semaglutide. So right now, semaglutide is on shortage. It is sold by Novo Nordisk, the Danish company, and many people in the Discord believed that it too was going to be taken off shortage. However, as we've approached the inauguration of Trump, the odds that semaglutide will be taken off shortage have decreased every day. So if you were to ask Bayside, he would say at the beginning of last week there was a roughly 20% chance that semaglutide will be taken off shortage. It's just too close to the next administration, meaning the likelihood that the politicians in charge of the FDA would remove it now are much lower just because of the political situation. Now, 20% is probably closer to 10% now. It's Wednesday, January 15th. We have now 5 days till Trump is inaugurated. If January 20 hits, semaglutide is still on shortage. We will have a new FDA head. At that point, it would be sort of an interim current staffer, a lifetime FDA guy who would be in charge. And it would.
So your view is that it sounds like, you're not to interrupt, but to interrupt, that it sounds as though what you're saying is, look, we're so close. Unless somebody wants to be fired, they're probably not going to make a change. And we get the new interim head. The new interim head's not going to try to do anything bold and whatever, especially knowing that, that there is a conspiracy theory. There is a thin dotted line from the Hims founder to the new administration, isn't there? I know they donated $1 million to the inauguration, but there's a Thune connection and an Elon Musk connection or something like that. Are you aware of that? I think the community's talked about that. What is that?
Well, there is some connection. I don't know that Dudum is, personally connected to Trump other than the $1 million that he gave the inauguration committee, the tweets that he's made. I will say his co-founder, Jack Abraham, is on the board of the Thiel Fellowship. Peter Thiel, of course, is connected to Elon Musk. Elon Musk is, of course, now connected to Donald Trump. And Elon Musk keeps tweeting about GLP-1s. In fact, on Christmas, he posted a Ozempic Santa. And it is a top priority of the new administration to make America healthy. So we'll see. I think if the administration wants to keep GLPs accessible, no cost, Hims is a good option. But I mean that remains to be seen. Dudum, I think, will have a chance to get on Elon and Trump's radar, but remains to be seen.
Oh, great. Well, we're hitting up against our time. If somebody wanted to check out Him's house, where would they do it, and what's the best way to check it out?
I'd say the first stop would be Twitter. We're at Him's House. We are on Substack. That's where we post the podcasts and the daily newsletter. That's himshouse.substack.com. And then if you want to really join the community and chop it up with the 1,500 other investors, the links are on YouTube and Twitter, and that really is the place to go for all of the good information.
Yeah, I will tell you that someone who runs a multi-billion-dollar healthcare hedge fund, I mentioned it to him. I thought I was bringing him something new and original. I was like, "Hey, by the way, I know they're short Hims." I go, "You should check this out because there's a lot of information." I actually checked out the podcast too. I'm not a big podcast person at all, but I found it really interesting, really detailed. So I told him, and he goes, "Yeah, no, we already subscribe, and I'm not sure about that." And he's short, so
he knows Him's House, David.
Oh yeah, he knew it, and he knew it well. And then I tried to say, but they have a podcast. He goes, "Yeah, no, we know." Apparently, they download the transcripts into their AI, and then they have a whole AI feed. So it's I think it's a meaningful position for him. And I keep telling him he's going to be wrong. But that's what I do like about the community, that it's not all bulls. It does tend to be a lot of bulls, but they are looking out a little bit further than a lot of traders are.
Maybe offline we can chat more about that. That's fascinating, David.
Yeah, I don't know your 1%. I'm sure that you're above 1%, but then if you net it out to the people who are short, maybe you're not.
Yeah.
So. But, well, this is Wall Street Beats. Jonathan, thanks so much for coming on and telling us about Him's House. I think it's great, especially when you roll it out to other things. I'll be watching that. I can give you a list of the ones on my portfolio that I'd like you to do. Bob, thanks a lot. And again, this is Wall Street Beats for January 15th. We'll see you next time. Thanks.